Hello. Energy markets remain sensitive to developments between the US and Iran this week, with prices generally supported by stalled negotiations and ongoing disruption in the Strait of Hormuz. Cooler weather, tighter supply conditions and lower storage levels provided additional support, although markets moved sideways at times as participants awaited clear geopolitical direction. So let's take a look at the week's actions in some more detail. Oil prices began the week holding firm above $100 per barrel on Monday, with geopolitical risk premiums remaining elevated. Despite some vessel movement through the Strait of Hormuz, confidence remained fragile after the US rejected Iran's latest proposals, reinforcing uncertainty around any near-term resolution. The upward trend extended into Tuesday, marking a third consecutive day of gains and reversing much of the prior week's losses. Sentiment strengthened as markets refocused on the risk of prolonged disruption in the region. By Wednesday, prices eased slightly but remained above the $100 mark. Broader macro factors came into play, with investor caution ahead of US-China discussions and concerns over potential interest rate rises weighing on momentum. A larger than expected US inventory draw of 4.3 million barrels provided some support, although it did little to shift overall direction. On Thursday, prices edged higher in early trading as attention turned to diplomatic discussions in Beijing, where efforts to resolve the Iran conflict are expected to feature prominently. Last night, front-month Brent closed at $105.1 per barrel, which is up $3.53 compared to last Friday. Gas markets opened the week with strong upward momentum on Monday, driven by colder weather and renewed geopolitical tension following stalled peace negotiations. Prompt contracts were particularly supported, with temperatures significantly below seasonal norms boosting demand, while unplanned outages further tightened near-term supply. Strength carried into Tuesday, with prices continuing to rise as the market assessed risks surrounding the fragile ceasefire. Lower wind generation and restrictions in the Strait of Hormuz added to concerns, while reduced LNG flows and softer Norwegian supply compounded tightening fundamentals. Storage levels, still below last year's levels, continue to underpin forward pricing. By Wednesday, the market lost direction, with prices trading sideways amid mixed signals from both weather and geopolitics. Participants remained cautious ahead of key discussions between the US and China, which were expected to influence the trajectory of the Middle East conflict. On Thursday, the market remained broadly stable. The UK system opened slightly long, with rising gas for power demand offset by reduced LNG send-outs and lower flows into the UK. Norwegian nominations remained relatively steady, while expectations of further LNG arrivals later in the month offered some reassurance. Overall, prompt and curve pricing reflected a balance between supportive fundamentals and uncertainty around geopolitical developments. So last night, all contracts closed higher than last Friday. Winter 26 gained 5.95 pence per therm and summer 27 gained 1.3 pence per therm. Power markets followed gas closely throughout the week, with early strength driven by tighter fundamentals and reduced renewable output. On Monday, prices moved higher in line with gas, supported by lower wind and solar generation. Market participants also highlighted concerns around summer gas storage requirements, which continue to feed into longer-term pricing. Tuesday saw continued support in near-term contracts, largely tracking gas market strength. However, further along the curve, declining carbon prices placed some downward pressure, creating a more mixed picture across the delivery periods. By Wednesday, markets stabilised, with contracts trading largely sideways in response to similar movements in gas. With the prompt, reduced renewable generation supported day-ahead pricing, while carbon markets showed mixed signals, offering limited directional influence. On Thursday, power prices remained closely aligned with gas fundamentals, with little movement overall as the market awaited clear signals from both fuel markets and geopolitical developments. So last night, most curve contracts closed higher than last Friday. Winter 26 gained £4.5 per megawatt hour, while summer 27 lost £0.5 per megawatt hour. You can download the full version of this market report from our website. Thanks for watching. See you next week.